My name's Mike Sullivan. I'm a former IRS agent and teaching instructor with the Internal Revenue Service. I worked at IRS over a decade. I welcome you to my YouTube channel. I'm a national expert in IRS resolution. I was a revenue officer. I was a veteran revenue officer. So what I try to do on my YouTube channel, I don't try to make them long to bore you, give you enough information to be dangerous, but I like to pull back the curtain and let you know what the IRS agent thinks. I'm kind of unlike other sites because I'm really telling you when your case is worked what IRS is looking for. So I want to tell you today what IRS is looking for when you give them a 433A and 433F. Or a 433B could be a business financial statement. IRS doesn't care so much about your liabilities. Your liabilities are your problem. They could care less. The only thing as an agent I'm looking for is your ability to pay the tax. And there's two things that I'm looking for on the 433A and the 433F. I'm looking for any assets that you have. I'm looking for your equity values in your assets. Can you can you borrow on your house? Can you borrow on your car? Do you have an IRA or a pension you can borrow against? Do you have a credit line you can borrow against? I'm looking for you to pay the tax, not get you a deal. My job is to collect the money for the Internal Revenue Service, not really to make you happy. Once again, I'm being honest and truthful. Now that I'm on the outside, which I've been for a long time, I'm hoping IRS is a little more generous and kind. But that's what IRS is looking for on the asset side. So can you get a loan on your car, your house? Do you have monies in your pension? And then after they look at the asset search, okay, they're now going to turn to the income search and see what sort of expenses you have against your income. This goes to the 433A and the 433B, which is the two IRS individual financial statements. Okay, so when you have these financial statements you're looking at, you should know that on the expense side, IRS has a national standard. We say, well, what does that mean? Well, many years ago, IRS created what they believe you should live on given a certain area. Actually, if you go to IRS and ask for IRS National Standards for housing and utilities, they will let you know what they're going to allow you in the county that you live in. So you can go, once again, you can Google IRS National Standards and find out what they're going to give you. They're going to do that in the categories of food and clothing. There's a standard for housing and utilities. There's a standard. There's a standard for your car payment and your operation of your car. Things like your medical bills, and if you have a student loan, they're going to give you those. But the big categories, IRS limits you. Basically, what they're trying to do is they're going to look at your income and they're going to look at your expenses and make sure you fit within their national standards. If you have any money left over out of their national standards and their boundaries, they want a payment from you. So once again, the two things they're looking at on the IRS 433A and the 433F is they want to know, A, can you liquidate, and are you living within your means? If not, IRS wants a payment. On the business financial statement, they're doing the same thing. They're looking at where they can get money from you. Once again, they don't care about your liabilities. They don't even care if you're paying them. IRS comes first. The only thing they add to the business financial statement is what sort of receivables you have, and can they go ahead and levy those receivables and pay. So understand that IRS financial statement that you give them gives them a map of where they are going to collect it. Now, if you don't have a lot, you can call IRS yourself. A lot of YouTubers like to call IRS yourself. If you owe any sizable money, what's sizable money? I don't know, 30, 40, 50, 60,000. You better get a professional involved because the agents, some agents are nice, some agents are sweet, and others are going to stick to the book. So you got to be careful when you owe more money. I do encourage a lot of people to do it on their own. If, like I said, if they don't have a lot that IRS can look at. Also, two things IRS is going to want to make sure that where you are, they're going to want to make sure that all your tax returns and you're current on all the taxes that you owe in the year you're in. So remember, IRS financial statement is giving them a map to collect money. What your liabilities are, IRS really does not care. It's sad, but they don't. Anyway, if you like my YouTube channel, I really appreciate you giving me a subscription or a like. And if you want me to create a YouTube based on something you've seen or you need answers, I'll pull back the curtain and I'll let you know what IRS thinks about that. So if you would do that kindly, and any comments you leave, I do return them. Thank you very much. You can also leave if you have a subject, you can email me. It's on my YouTube channel, or just send me a text. Thank you.